Welcome to the Payment Shed podcast, the weekly podcast that dives into the big topics, trends, and people shaping the worlds of payments, fintech, and business leadership, with your two co-hosts, myself, Grant Evans, and Justin Hanna. Welcome to the Payment Shed podcast. Today we are lucky to be joined by Xander Hastings, Head of Channel Partnerships at Rail. Xander, please can you introduce yourself and tell us a little bit about your journey in fintech and what you do at Rail today?
Well, thanks very much, guys. It's good to be here. So my name is Xander, Head of Channel Partnerships at Rail. My fintech career has been, about 5 years in the making. Started out at Stripe, focusing on the sales side for SaaS platforms, everything Connect-based in Europe for startups. That was my focus in lead gen. After that, I think I've always been a big crypto nut, I must admit, and have always been looking at different ways besides buying a bunch of Bitcoin to kind of get into the space and what the utility was. So when the idea of joining a company for stablecoin payments, namely BVNK, came up, I had to take that opportunity. That was about a year and a half in the making, and now I'm at Rail. So really, really excited to be here. I guess to explain what Rail does, we're a financial infrastructure company provider. So recently acquired by Ripple for $200 million in August. We really focus on serving fintechs in the space who are looking to offer stablecoin payments as a core part of their offering.
Brilliant. So let's start with the big picture, I guess, on this. So cross-border payments still feel a little bit slower and more expensive than they should. Why do global payments remain such a challenge in 2025? Despite so much innovation going on in the market.
Yeah, I mean, in the global payments world, you've got to deal with so many different currencies. You've got to deal with liquidity, speed of settlement. There are so many issues that you've got to solve in order to make a payment go smoothly. And yeah, it's definitely not finished yet. I think stablecoins will provide a really, really important piece in speeding that up. Namely, you're not going to have to go through 5 different corresponding banks to get from, say, America to Asia anymore. But yeah, it's a big problem. People are trying to knit things together to make it work. And I think, we're maybe 5 to 10% done, not close to the finish line yet.
When you mentioned there around kind of the pain points that some businesses might have, what do you think is the biggest pain point from a client perspective?
Sure. I mean, when you say that, are you talking about we're dealing with stable coins or in the general world? Yeah, no, it's a really, really important thing to consider, because people think that, stable coins, it's quite seamless. I can send from one wallet to another. I'll just off ramp and bring it into my own account, and then I can pay onwards. It doesn't really work like that. I think most banks in the space are still kind of unsure about this. If you are a fintech and you just go and make a partnership with a crypto exchange, for example, that's only one piece of the puzzle. You can get liquidity as tight as you want, but if you're trying to bring that back into the fiat system, it's a massive problem. Most banks will see payments from crypto exchanges and outwardly reject those, and therefore your whole payment flow is done. Where we kind of differ is in our banking strength. We focused on building up a really, really large banking partner network. We've got 15 underlying banks now, add a new one every month. And that enables us to do some really interesting things, like offer named accounts, not only for the fintechs that we serve, but for their underlying customers. So when they're bringing things back into the fiat system, there's almost that layer of separation between crypto flows and the rest of the fiat world. So for them, that's a reduced RFI risk, less debanking risk, and they can rely on us to make sure that ecosystem, while segregated, works for them in a way that they want.
So that hybrid infrastructure is effectively then beginning to change that picture, I guess, that we see of frustration and pain points.
Yeah, no, for sure. It's certainly solving the pain point of moving between the two worlds, right? Bridging digital with traditional. That's for sure.
And stablecoins have had their share of headlines.
Yep.
We're starting to see them used quite differently now and in different parts of the ecosystem. It's probably worth even explaining to our listeners what a stablecoin is fundamentally if we strip it back. I know we're sat here as payments people kind of talking about this, but
yeah.
Can you explain what a stablecoin is and how Rail uses them as a payment rail rather than a speculative asset?
Yeah, absolutely. So a stablecoin is a cryptocurrency, although I wouldn't go as far as saying it's pure crypto. Stablecoins I would say it's a bit different to your traditional digital assets like Bitcoin. Stablecoins are backed one-to-one with a currency that they're paired to. So if you think about USDC issued by Circle, the way that they would issue that is they would have a dollar in, and then they would issue a USDC stablecoin out to their the buyer. how we tend to use these payments, like for the most part, we're seeing like a really, really large adoption rate for these kind of things in markets where dollar liquidity is quite low and the local currency's volatility is extremely high. So when you're thinking about that, you're thinking about Latin America, Africa, other areas such as the Middle East are also seeing adoption rates. There's a really interesting report out by Artemis, I believe, which talks about stablecoin adoption. Yeah, I would recommend your listeners really take a look at that as well. But yeah, so these stablecoins are already being used as a method of payment on the ground for users who essentially don't really have much of another choice if they want to maintain the value in their currency. What we are doing there is providing the infrastructure so that our clients and our clients' clients can interact with these users while still, I guess, remaining compliant and also making sure they're not risking the rest of their payment stack.
When we talk about stable coins as an average Joe on the street, I think there's a lot of misconceptions, right? And from a business payment perspective, what would you say are the biggest misconceptions when people start talking about stablecoin?
Yeah, it's an interesting one. I think most people, the average Joe on the street, would look at crypto payments and think, well, that's money laundering. I would say the vast majority of money laundering still happens in the fiat system. But yeah, definitely an important point to take into account. For for them as well, I think there's this great expectation that everything is going to be really instant and there's no real sort of roadblocks to get things moving. I think in order to succeed in this space, you still need to have the necessary frameworks in place. It's not as simple as setting up a wallet and then making your payments. You need everything. You need everything underlying behind that in order to make it work. So that's banking, strict compliance measures in place, the infrastructure to actually make the payments all day long. Everything needs to be built around that rather than just a simple wallet where you can make a payment.
It's really interesting when you talk about that stigma piece, and there's elements of the card acquiring world that have always had association with gambling and miscoded gambling and things like that.
Yeah.
I think when you get an initial viewpoint on something, whether that be broadly crypto, and there's been some challenges obviously with businesses going pop and people losing money or having to fight to get their money back, and that it creates this narrative in the back of people's mind. And then you've got this amazing product in stable coins that has so many good use cases, but you're almost having to fight back against some of that stigma that exists. So to caveat then, can you give us some examples of where enterprise level customers that you guys work with, you don't need to name the companies, but where are they using this technology for real world B2B transactions today to solve those sort of problems?
Yeah, absolutely. I would go back to the collections from emerging markets piece. They're already in high adoption over there. I think for a lot of our enterprise customers who are perhaps US based or APAC based, like Singapore, Hong Kong, for example, they don't necessarily see the need in holding a stable coin. I'll be honest. They're doing it out of necessity. They need to find a way to get it back into the system that we all know and love, and we provide them with the corridor to do that in a way that doesn't get them debanked, I would say. Could I see stable coins being more used in day-to-day in the the Western world? It's possible. I mean, you look at the growth of all these card issuing companies that are letting you pay with stable coins on your balance, and you look at some of the yields that are being offered by Coinbase, for example. That's all very, very interesting, and I think we're at the start of seeing what's possible. It's quite exciting.
No, it's really interesting. And that's where Rail kind of really seems to stand out to me, connecting banks and blockchain in a single network. Can you maybe just kind of dive into that in a little bit more detail and how you guys go about that?
Yeah, absolutely. So we're really that infrastructure layer. So with us, you're connected to 15 underlying partner banks. As I said, adding a new one every month. We will open up named accounts for the clients that we work with. And that's a really important point when you say linking these two worlds together, because that counterparty risk or lack of clarity on the counterparty is something that it's kind of still plagues this industry today, particularly with other payments companies. Some of them are still running through pooled accounts, for example, where there's an inherent risk that you're going to get payment rejections, RFIs, debanking because of that implied association with crypto exchanges, for example. On our side, yeah, we're really what looks really, really smooth in the front end. There's a lot of work that has gone into the back end to linking accounts together, making sure that liquidity flows as it should. Yeah, it's a complex maze that we kind of solve that complexity for our customers and make sure that they don't have to think about that.
And you mentioned there, obviously, all the banks that you guys are currently connected into, you're adding more and more to that kind of that multi-bank redundancy play.
Yep.
It's obviously becoming very important.
Absolutely.
To Rail. Do you think that there's any challenges of working with multiple banks?
There's challenges of working with one bank. I mean, no, I don't think the challenges necessarily change. It's all about, making sure that you are maintaining ultimate compliance and clarity with the customers that you onboard and who you work with. I think for a bank, the worst thing that they can think of is receiving a payment that they weren't expecting from someone that they don't necessarily want to receive from. And the other side is, lack of clarity on that counterparty. So, in the wake of the collapse of Evolve and Synapse, this has been a really, really big sticking point for the industry. They need to have more knowledge on the counterparties that are involved and necessarily where the money is and where it's going. So yeah, we make sure that all of this is completely clear to our banks that we work with.
I think I'm having conversations with large enterprise businesses now, and the conversations, when you're doing exploratory conversations, actually now start talking about stablecoin,
Yep.
the ability to be able to access and receive payments in stablecoin, as opposed to the very legacy days of just Visa and MasterCard. So I think businesses are now getting clued up. I think stablecoin's gone from being a buzzword to actually an everyday usage that businesses are now become reliant on.
Yeah, no, absolutely. No more so than in emerging markets, right, where that adoption is so high. Yeah, I think the bridge to that world, the bridge between East and West in this regard, I think is pretty important as well. Like being able to off ramp into US dollar or off ramp into local APAC currencies. I think that's going to be the sort of next frontier, and then as we move forward, the stablecoin sandwich is going to become more and more interesting. For those that don't know what a stablecoin sandwich is, I guess it's fiat, stablecoin, and then fiat again, a quick conversion. That's really there to enable essentially an instant transaction where you can on ramp and off ramp it seamlessly. Yeah.
And that's a huge issue businesses are having, right? Because they can't get money from one country to another quick enough.
Exactly.
It's stopping their growth, right? It's stunting growth for businesses that have built fantastic products, but because the infrastructure they've been given in the past and not being able to really grow at speed. So what you guys are doing is enabling that, right?
Yeah, absolutely.
Even in global retail, you get brands that are operating in pretty much every region, and that must be a big frustration for them. I think people assume, again, your cryptos, your gaming, all that sort of stuff, gambling, like it is so much more than that. Like, are you seeing a bit of an emergence of, I guess part of this comes down to the transparency and compliance stuff that you guys offer as well, but are you seeing those more traditional brands that do have this problem that maybe would have been like arm's length, we're not going down that road previously, now like, do you know what, that actually can solve a problem for us fundamentally?
Yeah, absolutely. I would say definitely through our clients, we're seeing requests for these kinds of use cases. I mean, we focus on the financial institution and provide the infrastructure. Their clients are heckling them with demands, and we're seeing that upstream for sure. Yeah.
I think for me, over the last couple of weeks, the most interesting example I've seen of it is a logistics company on an oil rig that is based in the sea, but it has a lot of employees that are based in APAC. They want to be able to pay their employees, but their employees are never actually home to receive the funds. So they're now paying their employees by stablecoin. I think it's incredible that we talk about use cases you don't even think of, moving funds around the world. It's just people working want to receive via stablecoin now.
Where's that? I need to read about that.
Philippines. I'll share it with you.
That's I think that's a pretty high adoption rate in the Philippines for crypto. If I'm not mistaken, I think half of the Philippines, if not more, is like underbanked or unbanked. I'm sure with the use case that you talked about, they might be working with a local crypto exchange to off ramp that into Philippine peso.
Exactly.
There's a huge amount of investment going into Southeast Asia specifically at the moment as well. And I think, we've looked at the success of, Nubank is probably a really good call out for this in LATAM, but Indonesia as well as like the third biggest population in the world or something like that, right? But how much of is it unaddressed unbanked population. So, and there's, of course, from a business point of view, there's revenue attribution that could go against that, accessing that market and maybe removing some of the friction points that exist there currently. So yeah, no wonder that there's a lot of attention with stablecoins going into that market as well. And talking about percentages and sizes of population, amazing stat for you guys, considering when was Rail founded?
Founded 3 years ago, actually. Yeah.
So within 3 years, you're processing 10% of global B2B stablecoin payment volume.
That is a stat, by the way. That is incredible.
Unbelievable growth. Obviously, we'll get onto the Ripple stuff in time. But how do you then ensure scalability without compromising your compliance when you're processing that sheer volume of, just volume generally, I guess?
It really boils down to knowing the counterparty, right? Like we'll never nest transactions. We only focus on working where we have that full clarity of who the counterparties are. That's important because our banks are happy with that. They're more likely to process those payments. And for us, you can remain peace of mind that you're not doing all of the naughty stuff that people don't want to do.
Look, that point always comes down to regulation, right? You guys have grown extremely quickly.
Yeah.
How do you, as a business, kind of ensure from a regulatory perspective you're still doing what you need to be in an industry that's changing all the time, right? We're kind of building the car driving the car as we're building it right now when it comes to stablecoin.
Yeah.
How are you guys making sure you're able to kind of stay ahead of the times?
Yeah, I mean it's an important balance, right? You need to make sure that you're in compliance with local regulations. I mean, we're very, very heavy on the licenses that we hold, and anywhere where we're working locally without a license, we're working with a locally licensed partner and operating in the same way that we would elsewhere, where the counterparties are fully involved and onboarded. I would also say, our new owners, Ripple, would definitely operate in the same way. Yeah.
Okay, so nice segue. As you've mentioned it, we can't not really bring it up. The pretty big industry headline, given Ripple's sort of status in the market, the Ripple investment in Rail. What does that mean for you guys as a business? From a Rail point of view, but also for the wider cross-border ecosystem, the two combined brands.
Yep. Yeah.
Where's that going?
Yeah. So, it's a pretty hard news to avoid. I think it's really, really big news for the industry, right? So, what this is really going to mean for Rail is we're going to be able to move much faster. Much deeper liquidity coming from Ripple. That's going to help move the needle for our clients who are looking to make payments instantly across the world. So yeah, beyond that, it's extra currencies. We're going to be able to open up those kind of corridors a lot faster with the help of Ripple, extra licensing, and yeah, I think for the industry as a whole, what we're really aiming is to provide that infrastructure so that people can build on us and really serve their end clients in a major way.
What did you guys have that they wanted particularly then?
Yeah, I mean, it's an interesting question. I think for us, our stack has always been on banking power, but reality, for the main point, it's kind of like a match made in heaven. I think both of our strengths complement each other, and it's just going to go from strength to strength.
Look, I think global corridor expansion, right? This is kind of what's helping Rail for Ripple and Ripple for Rail, which is always good. And do you think this is going to signal with the Ripple acquisition of you guys? Do you think it's going to signal a new phase across the industry when it comes to maybe more established players looking at more I want to say the challenges, which is crazy because even the big players are still challengers, but looking to acquire more of the challenges that come into the industry?
Looking to acquire more of the challenges, as in buying up companies that are up and coming.
Correct.
Well, I mean, you can see that across the industry right now, right? So yeah, I don't think that road shows that is going to stop anytime soon. It's really exciting. I think it's it's really interesting to be in this part of the industry and compete among the best, I guess.
I think when you look at the acquiring space as well, right? Maybe some of the older acquiring banks, or even all acquiring banks. If you'd mentioned stablecoin a few years ago,
yeah, they would say that.
Not sure we trust it, and now people can't get into it quick enough, right? And because they've realised the cash flow improvement it's going to have from an acquiring perspective to move funds around the world, that allows them then to manage their own portfolio of customers even better.
Yeah. I think the saying is slowly, and then all at once. think, yeah, we're starting to see that now.
For sure.
Yeah, I think scheme interest as well and scheme partnerships potentially in this sort of market is something that I'm seeing creeping in. A few rumors around certain schemes maybe investing in certain players in the market as well. Why would the card schemes, do you think, have that interest? Obviously, you worked at Stripe previously as well, and in that more direct sort of card acquiring landscape. But how do you see the card schemes? The Payment Shed podcast is proudly sponsored by Tammy AI, the market intelligence and lead generation platform built for sales and marketing teams who want precision, not guesswork. Tammy helps businesses identify their best fit prospects, gain deep market insights, and boost revenue growth. And it really has become the go-to solution for the payments and fintech industries. Both Justin and I have used the tool in previous organizations that we've been in, and we really can't recommend it highly enough. There's a link in the bio to click on the Tammy website and find out more about their product. You really won't regret it. Looking at the stablecoin market.
Yeah, I mean, the biggest use case I've seen touted here is instant liquidity or liquidity over the weekend. I think that's an interesting one, and especially if you're settling between clients and you have the liquidity to pay out, say, in fiat. The use case would still require, a bit of off-ramping and on-ramping, unless you're balancing two floats of money. So yeah, I mean, it's not that side of the industry is not something I've really dug into too much, but I'm really interested in seeing, what use cases come out.
I think weekend liquidity is a great example. We've got a lot of card acquirers that are still struggling to compete with, some of the acquirers are pre-funding on a weekend for low risk sectors, bars, restaurants, whatever it might be. And I think that we've moved from T+3 or transaction day plus 3 in card payments down to more acquirers doing transaction day +1, but it's working days still. So from a business point of view, we'll start to see this narrative more where fundamentally a system exists that as far as they're concerned could allow them to get their money for payments, whether you have to off-ramp it, on-ramp it, whatever it might be. They're saying, well, why aren't you guys using this solution? The acquirer needs to get the settled funds from the scheme quicker to then to be able to pay out to the end merchant for that transaction. I kind of see that as where this will head and why the schemes may have interest, because they, funds can move quicker. You remove some of the challenge that exists with A2A processing, which is obviously pretty much real time. It's faster payment network. It's 24/7, 365. Invariably, when open banking or paid by bank as a payment method gets its act together and removes some of the UX friction points and sits within digital wallets more prevalently, and it is obviously there in certain countries and regions, but when you think of the UK and Europe and markets like that, that threat is there. It will come at some point. So the schemes for me should definitely be looking at particularly that liquidity weekend piece. So it's going to be an interesting one to watch. And I guess that takes us into the road ahead for cross-border payments generally. What is next for rail and the broader industry in this segment?
Yeah, no, absolutely. I guess to echo your point, we all started out with stablecoins being a method to do crypto trading in instant time without having to go back into fiat, right? That was the main use case that stablecoins were invented for. And it's really interesting to see how all of these extra use cases are kind of popping up and how this new technology is being used. For cross-border, I think that the main thing right now, a lot of people are still doing what you call half sandwich. So if you take the fiat to stablecoin to fiat and you cut it in half, that's pretty much what a lot of people are doing. I think that, more and more people are really trying to push to that full sandwich approach. What flavor of sandwich that is, I don't know. But I guess
I'm ready for more abbreviate. I've had enough abbreviations in card acquiring and gateway, and now in stablecoin land, I've got sandwiches and half sandwiches and baguettes and God knows what else.
Absolutely, yeah, baguettes.
I just want a stable BAP.
Is that actual terminology? This is actual sandwich and half sandwich?
Absolutely, yeah. It's just another TLA, 3-letter abbreviation type of thing that people are going for. A few more that
you can throw at us that are unique to stablecoin land?
There's probably loads, but none on the top of my head right now.
When we talk about, and we obviously talk about from an acquiring perspective, is moving funds quicker. And the reason why acquirers struggle to offer T+1 because it's a line of credit that they don't actually have. We look at Visa and MasterCard, we look at what they're doing in this space, investing, potentially buying. When you look at some of the news over the last 24 hours, that is going to then kind of give no excuse, I suppose, for money to be moving real time. And we talk about how data moves real time. Is money with a few digits, right? Not just data in someone's bank account. surely with where we're going in the future, there will be a time where instant settlement just becomes a thing. When we say real time as in actually instant.
Yeah, absolutely. I think that time will come when stablecoins reach its mass adoption at the retail level, right? So is someone happy to receive a stablecoin? Can you pay with a stablecoin wherever you go? You're starting to see that with cards, right? But there's still cards that are holding a stablecoin balance and then off ramping that into fiat at the point of purchase. I would like to see a lot more of people holding balances in stablecoin and that account to account transfer being a lot more seamless.
Well, real estate, right? It's going to be the prime
Yeah.
kind of industry that everyone seems to be talking about. If you are purchasing a house, whatever it may be, it's one of the most expensive things you're going to be able to purchase. Why not do that via something like a stable coin? That would save a lot of money and a lot of time.
Yeah, I mean, if you walk down the street in Dubai, I'm sure someone will offer you that. We're starting to see that already. But I think there's a bit of a lag, I think, in the Western world for someone trying to purchase a house using stablecoin. But yeah, in the forward-thinking countries like the UAE, you're definitely seeing that now. It's quite interesting.
It's the same way of saying someone, a busker in London, accepting a card payment 10 years ago, you probably would have laughed it off, right? But now you can literally walk past someone who's busking and they've got a card reader
right there. Yeah.
How long do you be able to give them some stable?
I'm pretty sure that the big issue sellers have just gone. I don't know if it's with. I'm sure it was a news story this week, but they've gone down the A2A route with the QR code.
Yeah,
so helping people to make donations. And with regards to countries looking at fiat, you've got some talk in Europe around obviously centralized payment rail at the moment. I kind of feel like over the years we've gone round and round in circles on this as well, and a lot of reactive stuff happens in crypto and stablecoin land, and that can be the Trump administration at the moment, right? The US was regulating up, if you like. He's come in. It's kind of open house at the moment in terms of still regulation applying, but in crypto particularly has gone on a massive boom journey since the change of administration there, and it does seem that it's very much open for business in crypto. What's your view? I mean, there's a couple of questions in there. So your view on fiat and where that will maybe go from let's take the European market and the UK as an example first and foremost, and then looking at the US market as well. What excites you the most around the stablecoin growth and boom that's happening out there?
Yeah, I mean, I don't want to talk about politics, but yeah, no, it's interesting the real drive with the Genius Act now and everything that's going on, and that focus still seems to be around stable coins, right? I mean, look at USDT, USDC, all of these stablecoin issuing companies are almost acting like banks when they're buying treasuries with the money that they're issued. I think you'll probably see a lot more of that. That's quite interesting. Within the capital markets as well, BlackRock's released their Builder fund. I'm quite excited to see more of that, to be honest, and more of finance coming on chain. That's a really interesting thing for the US. I am somewhat, I must admit, a little bit more concerned about Europe and the UK and how they're kind of posturing to do that. I think Micro obviously set some rules, and it was good that they were the first, but it still needs to be adaptive to make sure that you're not falling behind the times.
And we've seen, talking about stable coins acting like banks, we've seen Stripe and Checkout.com get banking charters. They're not becoming banks, but just in the last few months, both have secured, I think Checkout as recently as this week, have secured banking charters. And one of the main reasons for that is the ability for them to move funds quicker, right? So that flips us back to acquiring land, because we'll always end up back there because of the nature of us too. But that for me was really, really interesting. And it again highlights why stablecoins are so important going forward in the financial services industry. What was your kind of take on those guys getting charters, and are they target customers for you guys, acquirers? And
yeah, absolutely. I think for those guys, obviously having banking charters probably means you can hold on to funds for long and do some very interesting things which you might not have been able to do with EMI licenses, for example. Would they be customers of ours? Absolutely. Yeah. I think wherever there is movement of money in between the fiat and the stablecoin world, we really look to provide that bridge and make it more seamless. I think that half of these solutions that are built for these worlds and bridging these worlds are kind of only half done, and the banking piece and making that link is super important.
And
So
how do you see that collaboration across kind of fintechs and banks and regulators in shaping the future? Because we've already got quite a busy ecosystem, right? And how do you kind of see that collaboration moving forward?
yeah, I mean, it's clear we're seeing more and more banks look into digital asset worlds, how they can work with it. I think some of them are still kind of, I guess, hesitant to jump into the fintech programs for that. I think there's still a world where there's more work to be done on that side, but yeah, as regulation changes, we've got to adapt with it. So yeah, I think more collaboration, making sure that clarity in the counterparty is a really important piece to make sure that everybody stays compliant regardless of how the rules change there. If you don't have that, you can't be agile, right? So yeah, offering a great stablecoin solution is only one piece of the puzzle. You have to be able to link that in there as well, and I suppose that's how fintechs can work with banks, and then banks as a result can better work with regulators.
No, it's really, really interesting. And I'll ask you as well, and I know I've done the US and Europe, but you're obviously based here in London, in the UK. Your team's fairly global, isn't it, in terms of where individuals are? But the UK market, I kind of feel like we've had a bit of an innate fear, particularly of crypto and stable coins. And there are some great origin stories happening here now, but I kind of feel like we're still a little bit still on the edge going, we're going to watch what everyone else does. As someone that's based here, is it even a target market for you guys, or do you kind of sell out of the UK because we're not quite ready for the next evolution of this?
Yeah, I mean, I can't say it's not a target market, I suppose, but you can point to the fact that the FCA barely approves anybody for a VASP license. It's so hard to get it here.
Timelines are we talking?
Oh God, so, sometimes years. From what I understand, I mean, I'm not on the regulation side and inside rail, so I can tell you.
What's their concern? Why do you think that is? What is it the FCA is so afraid of in terms of that?
Yeah, honestly, I'm not really sure. I think maybe it's a status of let's wait and see. Perhaps they're still reeling from the fact that a lot of this innovation probably was used in higher risk first. I mean, it's pretty common in most payment methods, right, for things to go through the higher risk industries first as the kind of early adopters, and now it's coming further down the.
Isn't that ironic though? To me, that's really ironic that that we start in higher. I don't know what your thought on this, Justin, as well, but why do we guinea pig the most high risk and volatile sectors with these really innovative products that then can damage their reputation further down the road? I mean, we've seen this with certain products in acquiring land. What's your take on that?
I think it's giving people that are a little bit nervous even more reason to be nervous when it comes to how businesses are taking crypto and have taken crypto, because it's being utilized as a wallet that allows you to do whatever you want once the funds have gone into that wallet. If that means gambling or gaming where you might not be able to pay by your Visa or MasterCard, it's allowing people to gamble by crypto. That's why people are concerned about it, because there's been a lot of stories where it hasn't worked successfully. However, I would say now there's a lot more good stories out there and happy stories than there's about negative stories when it comes to crypto and stablecoin. And we're seeing the banks now change their mind, which is fantastic. The UK in itself is still a little bit nervous. The same reason when we look at open banking, we thought we had a great product. It is a good product. We're just nervous to roll it out. So we can say it's consumer driven, but maybe the merchants are not pushing the fintechs enough to push the regulators and the banks enough.
Is it a follow the money thing though? Like, what's your opinion on that? Is it this fear that they cannot actually follow the money and you don't want to get behind something that then creates black doors or blank spaces?
Yeah, I mean, I think the good thing about blockchain is you can track a coin further and further down the blockchain and see which wallets it's touched, right? You have these great innovative AML KYC platforms that are looking into that for crypto and ensuring that you're not touching a wallet that is, for lack of better, like funding terrorism, for example. I think this space is obviously developing. I'd be keen to get your opinions on this. I mean, FTX happened a few years ago. Do you think that's probably something that would drive this kind of hesitancy from the UK? I mean, the FCA is quite risk off, right?
1,000,000%. If you go and speak to most people that have no idea what crypto or stablecoin is, and you will say what your thoughts, they'll go, oh, what happens at business in the US? And the reason why that's happened, because social media has told this story of the whole world collapsing because of FTX.
Yeah.
What they're not going to go on social media is tell you how a Filipino logistics company has sped up paying their workers, right? People don't care about that. They want to hear stories because that's just the way humans are wired. So I would say it's definitely a glass half empty perspective from a UK standpoint when it comes to crypto, unless you're in crypto and you're seeing the benefits of it. So it's kind of, until you come to the party, you start enjoying it, people are just hesitant about it.
I think the issue is the schemes are getting better with it, though. I mean, you look at crypto.com where you can have, I'm pretty sure is it a Visa co-branded card or issued card they've got, so you can, draw down those crypto funds onto a Visa card and then go and spend that money as you would, a card linked to your normal bank account. And I think that's massive progression for us as a UK, forward facing view anyway, because I know people that have those cards and are operating that way and kind of feel like you're being rewarded for your investments, and it's being treated like any other investment would be. I've made this investment, it's grown, I've made some money, I want to go and spend that money, I want to go on holiday, I want to buy a new TV, I want to buy a new car. You don't want to feel like your money's actually trapped in an ecosystem that various key moving parts for you to be able to use that money aren't trusting, right? And that's not fair. Like, why should you not be able to do that just because this innate distrust exists? So I think we've actually jumped forward massively with stuff like that going on, and it's great to see what the next 5 years looks like, or 10 years looks like. I guess that's a good question to kind of end on before we go to our final segment. What is the next 5 or 10 year journey in stablecoins and more broadly in crypto, as far as you're concerned?
Yeah, I think I'd point back to finance probably coming on chain, right? And money market funds are just the start. I think you can see a lot more things become tokenized, and it's already happening, right? You see real estate ledgers being tokenized, being formed as real world assets, RWAs. That's quite interesting. From a cross-border payments
abbreviation.
Yeah, sorry, another TLA. I apologize. Yeah, well, you got your extra one there. There you go. Yeah, no, I mean, for cross-border payments, I think that one thing I'm super interested in is how non-US dollar backed stablecoins are going to fare, and what difference that's going to make.
As in, because USDC is the poster child, and that's seen as the most trust exists with that.
Well, yeah, but I mean, if you think about the usage, USDT kind of dwarfs USDC in emerging markets. I think it's like 70% of the volume. So yeah, no, regulation doesn't necessarily always drive adoption. Certainly in certainly in more developed markets like Europe, obviously USDT is not here anymore, but because it didn't comply with MiCA. But yeah, that's quite interesting. But I think more interesting is, how is the stable coins coming out of, Singapore, Hong Kong going to kind of play in the mix? I think a lot of the benefit for the stable coins that are US dollar backed is because the US dollar is the world's reserve currency. If that were to change, it'd be really interesting to see what the differences would be in like the adoption rate of the stable coins coming out of all these other markets. So yeah, that's something I'm keeping an eye on. Outside of that, I kind of predict more and more fintech companies to be adopting this as a core part of their offering. I think more banks will become open to it. Some of them still aren't right now. It's a really important piece to drive home to them that this is kind of where the market's going. You need to find a way to make it work. And yeah, no, I'm just really excited to see more and more volume being pumped through stablecoins.
Ideally through Ripple.
Yeah, that would be nice. Yeah.
So before we wrap up, Xander, we've got our favourite part of the show, our shelf of shame. We nominate you to bring something to the shelf of shame, and we agree whether or not it's going to be banished forever, or you can take it back with you.
Yeah. Oh, blimey. I think think in the business world, and this is quite poignant coming back from Token last week. I think we should really ban the use of physical like business cards, because I've got about 1 million of them in my backpack right now, and you know,
Where was the Token event, out of interest?
it was in Singapore.
Yeah.
Which was very nice.
But in Asia, the physical business card is a thing still.
Yeah.
Like, it really is. Like, you know, there's an argument, like, in certain markets, it's still a very done thing, isn't it?
Yeah. I also learned something that the way that you give business cards in Asia is very different. You have to do it with two hands, almost like giving a gift. I mean, but I've got about 1 million of them in my backpack, and half of them I'm not quite sure who they belong
Justin
to
and I
anymore.
are old enough to have had probably Rolodex for business cards
there you go.
many moons ago.
Yeah.
So you haven't had to have that pain anyway.
No, it's getting better.
I'm gonna have to agree. I'm gonna have to agree with that. I think when you go to an event and you're getting business cards, I've then seen people say, "Can I just take a picture of you so I know who it
It's
is?"
such a common thing in crypto.
Come on, guys!
They love a selfie.
Like, you just take my name and my number and email me, or search me on LinkedIn.
Crypto loves a selfie. What?
No, so many people at Web3 conferences will just they'll A, ask for your Telegram handle, and then B, ask if they can take a selfie.
How do you? They ask for your Telegram handle. We just talked about crypto not being seen as a high risk sector anymore, and the first thing that people are still doing is asking for your Telegram handle. That is a poignant one to point out. Let's just ask, can I connect with you on LinkedIn or WhatsApp? No, I want your Telegram handle. Selfie. I obviously haven't been to enough of these events where you're getting a selfie with a business card. I would 100% agree. I hate physical business cards with a passion. And then the next evolution of this was companies that are doing a business card with a QR code. It's still a physical business card. I'm still having something physical in this digital wallet driven. Actually, Nigel from EIT obviously nominated physical loyalty cards. It's a similar principle, but I don't even want a singular card. You can already scan a QR code on LinkedIn, connect on there, send a message real time. You know who you've connected with. 100% I will put it on the shelf of shame. 100%.
It's here to stay.
Just finally then, where can people find you, connect with you, find out more about Ripple and Rail? And obviously we'll see what happens with the naming there, I presume, in time. But yeah.
Yeah, no, that's going to be exciting. Can't really give any answers on what that's going to look like. But yeah, no, you can still find us at rail.io. I'm easily trackable on LinkedIn. Rather than a Telegram or a physical business card.
I bet you are on Telegram. Let's not fib about it.
We need a selfie with him, don't we?
Yeah, we'll get a selfie afterwards, don't worry.
Brilliant. Thank you so much for your time, Xander.
Thanks, Xander. Really interesting.
Cheers, guys.
You.